Hello everyone, and welcome back to Money Talks, Finance for All. I'm Alex.
And I'm Sam, your co-host and voice for those of us just starting to figure this finance thing out. This is our second episode, and today we're tackling something I know a lot of you are curious about: how to start investing with little money.
That's right. You don't need a ton of cash to begin investing. In fact, many people assume you need thousands of dollars to even get started, and that's simply not true. With the right tools, strategies, and mindset, you can start investing even if you only have a small amount to spare. And that's exactly what we're diving into today.
This is going to be great. Investing can seem so intimidating, especially for those of us on tight budgets. But Alex, let's kick things off by breaking down the myth that investing is only for the wealthy. Alex, why do you think so many people still believe that investing is only for the rich?
You're absolutely right, Sam. It's a common misconception, and I think it comes down to how investing used to work. Years ago, investing required large sums of money because there were higher minimum deposits, limited access to markets, and expensive fees charged by brokers. For the average person, it just didn't seem like an option.
So, what's changed?
A lot has changed, thanks to technology and financial innovation. Today, there are options that let you start investing with as little as a few dollars. Online platforms, lower fees, and tools tailored for beginners have completely opened up the playing field. It's about empowering regular people to get their foot in the door without needing to be a millionaire first.
That's so encouraging to hear. But I imagine the first step is still the hardest.
Absolutely, and that's why we're here, to demystify the process. Once you understand how investing works, you'll see that starting small can still lead to big results over time.
Alright, let's get practical. Let's say I have $50 or even $20 that I've managed to save. Where can I start putting that money to work?
Great question. If you're just starting out, the most important thing is to have a clear plan and realistic goals. Here are 3 key starting points. 1. Robo-advisors. Think of these as your personal digital financial advisors. They assess your goals and risk tolerance, then invest your money in a diversified portfolio automatically. They're perfect for beginners because they handle the heavy lifting for you. Micro-investing tools. These platforms allow you to invest small amounts regularly, like spare change or a few dollars at a time. They're a great way to start building a habit without needing a lot of money up front. NBSP, index funds and ETFs. These are collections of investments that track the performance of a market or sector. They're low-cost, beginner-friendly, and highly diversified, which helps reduce risk. Some providers even let you start with no minimum investment.
Okay, now I'm starting to see how accessible investing has become. But let's talk strategy. How can someone with limited funds make the most of their investments?
Great question, Sam. Here are some key principles to follow. 1. Start early and be patient. The earlier you start, the more time you give your money to grow. Even small amounts can compound over decades. Remember, investing is a marathon, not a sprint. 2. Consistency is key. Small, regular contributions can add up over time. Even if it's just $10 a week, the habit of consistent investing will set you up for success. NBSP. 3. Diversify. Don't put all your eggs in one basket. Spread your investments across different industries, asset types, or funds to protect against risks. 4. Focus on low costs. High fees can eat into your returns, especially when you're starting small. Look for platforms or investments with low or no fees to maximize your gains. 5. Reinvest your earnings. When you start earning returns, reinvest them. This helps your investments grow faster through compounding.
Now, I've heard people say that investing can be risky, especially if you're new. What are some of the common mistakes beginners should avoid?
There are a few pitfalls I always warn people about. 1. Impatience. It's tempting to expect quick results, but the truth is, investing takes time. Stay the course, even if you don't see immediate gains. 2. Trying to time the market. Even professional investors struggle to predict market ups and downs. Instead of chasing trends, focus on long-term growth. 3. Skipping the emergency fund. Before you invest, make sure you have 3 to 6 months worth of living expenses saved up. This gives you a safety net in case of unexpected expenses. 4. Investing without research. Take the time to understand what you're investing in. The more informed you are, the better decisions you'll make.
Before we wrap up, let's add an important note for our listeners. The information we've shared today is for educational purposes only.
That's right. We are not financial advisors, and we're not responsible for any decisions you make based on the information we've discussed. Always do your own research, and if you're unsure, consider consulting a licensed financial professional.
Alex, this has been such an eye-opening conversation. It's empowering to know that anyone can start investing, no matter how small their budget is.
I'm glad, Sam. Remember, the key is to start. Don't let fear or misconceptions hold you back. Every investor starts somewhere, and small steps today can lead to big results in the future.
Thanks, Alex. And thanks to all our listeners for tuning into Money Talks, Finance for All. If you found this episode helpful, please subscribe, leave us a review, and share it with someone who could benefit from this.
Until next time, keep learning, keep growing, and most importantly, keep investing.